Hey there traders, welcome back for episode 116 from the StockBandit.tv. It's a place you can always find trading videos to make you better. Well, last week, taking a look at the indices here, it was a holiday shortened week with the markets being closed on Monday, and actually Tuesday started off on a positive note as we surged higher and came back up to challenge upper resistance in each of the indices. The market was acting like it may be threatening to break out. However, on Wednesday, the scene changed and we sold off and we tested the lower end of this multi-week trading range that we've been in recently, and we were able to rebound and kind of finish the day back in the middle of that range. But on Thursday we sold off very hard. We did break support across the board, which I'll show you momentarily, and then we saw continued follow through on Friday. So we saw big volume along with that, and here we are now. We're out of this trading range that we've been in for the past couple weeks. We also have a pretty significant change of character as the market kind of creates this rollover type of look, and suddenly the dip buyers are nowhere near as aggressive as they've been throughout the entire uptrend that this market has been in for some 10 months. So here we are right back to this 2205 area. For the NASDAQ, that is former resistance. That was a trading range that we spent most of November and early December in. So interesting to note that former resistance has now turned into at least some temporary support, as that's where the sell-off stopped on Friday. But that's not to say that we're going to finish here or even bounce from this level. Of course, I'm certainly not here to make predictions. As a trader, it's my job to look for good opportunities and then act based on those opportunities. It's not my job to predict what's going to take place or at which point the market is going to reverse course. Now, I do want to take note of key levels such as this 2205 area and know that that's a potential area to bounce from. But if we don't, then I'm certainly not going to argue with it. So for the NASDAQ, the next area of possible support is down here at the 2140 zone. And that's going to, of course, be basically a carbon copy distance from Friday's close. Basically, it's going to require a carbon copy sell-off to what we saw on Friday before we were to get there. But for now, this market is in sell mode, and that certainly deserves our respect after this 5% move to the downside in just 3 days. For the S&P 500, this index not only broke out of this short-term consolidation mode that it's been in, between the 1150 resistance area and 1130 support, but it also broke this rising trend line that started right here in early November and was validated during December and more recently in the past several sessions. But now, last week we did sell off very sharply in this index. We moved back down through this former resistance area. That's around the 1113 zone right here, and we undercut that with ease on Friday as we sold right off. And the next level to be keeping an eye on is right down here. It's only about 7 points away. That's at the 1084 zone. But here again, another 5% sell-off in just a few days on increasing volume suggests that along with this broken rising trend line, that the S&P is finally seeing some long-awaited profit taking. It's certainly going to be interesting to see at which point the buyers do step in and provide some support for this index. For the Dow, a little bit more significant technical break last week as this uptrend line that started in March of 09 also validated in July of 09 and more recently in December and in January. Obviously, take a look at the distance between price and this trend line. For much of the rally, there was a considerable distance at many of these points from where rally was topping out. Where price was topping out in these rallies compared to where that trend line was. But as you see, the pace of these new highs kind of diminished along the way as this trend line stayed constant. And ultimately, in the past couple of months, we've not gotten very far from this trend line at all. Finally, on Thursday of last week, we did undercut this on a closing basis, and we saw a continuation on Friday. That is a very important technical breach, which really suggests that finally this thing is going to take a little bit more of a extended breather, as opposed to just kind of settling into some of these very uneventful trading ranges that we've seen in recent months. So this definitely is worth noting. This rising trendline break does not constitute the start of a new downtrend. We would need lower highs and lower lows for that to occur, but this does tip the market's hand for us to start watching for a possible lower high if the next bounce doesn't carry back up through this 10,700 area. And this is about a 550 point sell-off over the past 3 days. So the next level to keep an eye on is right here, about the 10,120 area. It's only 50 points away from here. Finally, we're going to take a look at the volatility index. This is the VIX. And we see that just in 3 days, this thing has spiked some 55%. Okay, that's a tremendous run in just a few days. And this is otherwise known as the fear index. Generally, volatility climbs as people sell stocks, and obviously this is tied to the S&P 500 index options. So it is option related, but it's also index related. So this thing, the last time it spiked, it did top out right here around the 3184 level, and then prior to that it topped out around the 33 level. So it does still have some more room to run before it hits some of the more recent resistance levels that it's found, but it is on the rise, and that suggests that fear is in the air for the first time in quite a while. So definitely going to be an interesting next couple of weeks. Stay on your toes out there. Respect this market. It absolutely can move in both directions. A lot of people have forgotten that, but this is a very good reminder for us to know that we can trade the long side and the short side and find opportunities there. So thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.